Good morning, everyone. Welcome to our Tuesday morning trading session. Technically, it's also a Raptor training day, but we've already gone over all the Raptor materials, so now we're more looking at the actual implementation. However, your questions are most welcome, so please don't be shy. If there's something that's bothering you, ask away. I will do my best to answer for you. Don't guarantee I'll have all the answers. Don't guarantee I'll even have a good answer, but I'll give it my best shot. All right, you can see here, we'll take a look at the eagle. It kind of gives us a bird's eye view, if you'll excuse the pun, but market opening down here around 53.50. This was a pretty significant number for us yesterday as well. This whole 53.50, 53.40 area. You can see yesterday's range. The market made a nice recovery in the afternoon, and then rather quiet going into the close, finishing the day around the 53.60 mark, actually. So the NASDAQ seems like it's really sticking to those 10s, the 40s, the 50s, the 60s. Slight opening gap. We'll see whether they try to get into that this morning. And right now we're just kind of waiting. Oh, I see. Yeah, Tom's asking, I just bought the Raptor recently. Will the Raptor classes just ended come back around again? What I'm doing is I'm actually doing the individual segments in a video format so that you will be able to access each of the Raptor components at your leisure. But of course, you know, we'll be reviewing everything daily as well. So you can see we've got a few counter trend signals printing here. This printing toward yesterday's close. This number 2 signal, the market retreating to the hard edge, which is our initial target with a counter trend signal. And then the Asian session just before, well, actually that's quite a bit later, just before the London Open, we tried to get a with trend signal, and then they came back with another counter trend. So it is looking as though the NASDAQ might be trying to head a little bit lower. Yeah, Christian says, first question with the Raptor 2.0, can I make money with it? Well, you've got the best tools going, I think. Maybe we're going to see a little bit of a trend line test here. All right, good question here from Tom. Tom asks, on that first number 2 signal, why not trade there? I understand in hindsight shows not to, but what about in real time? All right, let's take a moment here and review these signals. All right, so first we've got our number 1 signal. That's our trend change signal. It's technically the cloud crossover signal. It occurs when your trading bands change direction. So we've gone from a bearish band to a bullish band. The number one signal normally has a little pullback component to it as well. We usually like to see the market, as it changes direction, try to retreat into the cloud, and then the cloud to push prices back out again. What this is actually showing you is the sellers trying to recover the trend. And then when they fail, once more, it shows you that, in fact, the buyers are in control, and that's what confirms the buy signal. All right, so that's the number one signal. The market goes up a little bit and now produces a number two signal. Okay, so Tom's first question is, why would you not consider these signals through here? Well, the number one signal, even though it is a valid signal, is producing near the end of the day. It's not that I wouldn't take the signal. It is a valid signal, but I might dial down the risk a little bit on that. You know, instead of going in for the full risk amount, I may choose to dial it down maybe to 1%, or maybe I'll go to manual mode and just trade a single contract. All right, so that's what you should do when the market gives you a signal that you're not entirely sure about. As you can see, this one went up a little bit, hesitated, came back down, gave you a number two signal, and then started to fall apart. The number two signal developing almost on the market close, which again is a very unpredictable time to be trading. It's kind of like the first few minutes of the trading session. My own personal preference is to give the market a little bit of time to kind of find its bearings. So here we are at the end of the trading day, and now we're producing a number two signal. Now the number two signal is our counter trend signal. There's always two components to a counter trend signal. First, you have to have a trend. And I'm going to demonstrate it down here because this one is actually a better looking number two than this one up here. First, you have to have a trend. Then you need to see the trend fail. It's what I refer to as a test of the extreme. Other traders will refer to it as other things. That's how I learned it. So that's always the term that's kind of stuck. So we're retesting the low, and we can no longer recover the downtrend. In this case, we actually got two number two signals. Retesting the low cannot recover the downtrend. We're producing a counter trend signal. These number two signals can be very powerful signals, which is why they're included in the assortment. Here too, though, because it's counter trend, you don't want to get in too heavy. Unless you're trading a larger account, it's probably the kind of trade that you're going to take a look at maybe trading a single contract. The nice thing about a counter trend trade is you know where to place your stop. Your entry is here, your stop is going to be up here. Because if the market brings you in and then goes back up and fails, trades through the high, well, then you have a pretty good idea you are on the wrong side of the trade. And that's the point of your stop loss order, isn't it? It's not to maintain some sort of fictitious risk-reward ratio or anything of that nature. It's to tell you, no, I think I was wrong about this trade. It's time to get out. Now this number 2, this retest, is not as obvious as this retest down here. We have a market that is in an uptrend, no question. It comes down, tries to recover the uptrend, it does so for a few bars, and then it fails. That's why you got a number 2 right here. These tests of the extreme are not as common as this down here. But it does show you the same thing. It shows you a market that can no longer maintain its trend, hence the number 2 signal. All right, then we're confirmed with another number 2 signal. Now here toward the London Open, we produced a number 3 signal. So this is now a hard edge bounce. Again, it's a high probability signal. However, it's just the time of the day, really. There's not as much volume going on at this time, especially around the London Open now. So it's the same thing as the North American Open. I tend not to get too excited about that first, few minutes of the trading day. I try to let the market settle in. So, but it is, it is up to you. But because it is the London Open, and we can see some very nice moves in the NASDAQ during the European session, but generally speaking, it's the market open. If you're going to take the signal, again, I recommend dialing down the risk a little bit. Here too, you know where to cover the trade. The other thing you can do is you could do a second push entry. A second push entry is very helpful if you're not sure about the signal. If you're thinking, okay, is this market going sideways? Is it changing direction? Is this current leg nothing more than a more proper test of the extreme? Right? This test of the extreme was a little bit sloppy. Are we going to see a better looking and more textbook-like failure before the market heads lower? These are the kinds of things that should be going through your mind. A number 3 signal that's printing this high, the trade now becomes a matter of logistics. And what I mean is, it's not so much the signal that I'm interested in as, can I profit before I encounter the highs? Well, maybe. I could certainly take a scalp profit. If I reduced my profit objective to a regular $50 target for a scalp profit. But look at how far I need to go to realize my high probability profit target. I have to pretty much recapture the highs. And yet, what do we know about tests of the extreme? They tend to fail, right? So had this number 3 signal printed down here, it would have been an easier trade to take. If the number 3 signal printed down here, well, now you can say, well, I've got a lot of room here. I can see a reasonable test of the extreme, maybe even a failure. I can still very likely manage my trade if the signal fails. Whereas with the signal printing right here, it's getting a little dicier. It's getting a little, we might be running out of room to do something with our trade. Remember too, I'm a big proponent of trade quotas. I don't think you need to chase every single signal. There we go. I believe, if you set yourself a trade quota, preferably on the low side, if you don't know how low, take a quarter, see how many times in a row you can flip heads. And no, I'm not kidding. As many times as you can flip heads in a row, that's how many trades you should take in a day. You're going to find that the odds of flipping heads in a row dramatically decreases with each flip. I think the best I did once was 6 heads in a row. But typically you're going to go about 3, and then you're going to toss tails. So just try that little experiment. That's how many times you should trade in a day. That kind of puts the odds in your favor. So if you know you're only going to take 3 trades in a day, and you get a signal like this, sure, it's a number 3 signal, sure, it's a high probability signal, but is it a really desirable number 3 signal? Well, no, it's probably not the best number 3 signal. Like I said, had the hard edge bounce printed down here, that would have been a better looking number 3. This one's printing a little bit late. So maybe you're going to do a second push on the entry. Maybe you're certainly going to dial down the risk. You're going to do things to protect yourself. So here's, if you did the second push opportunity, you would have been all right. Otherwise, you'd be in the trade. And did the market give you a chance? Well, it gave you a couple of bars here, suggesting we're struggling, we're not going to get much higher. And then there you go. You get one opportunity to roll your stops, and then the market kind of reverses and goes against you. So unfortunately, the signals are not 100%, but that's the kind of thing that should be going through your head when you're looking at a trade, trying to evaluate the signals. Look at this number 3 signal that printed. No number 2 signal in between. You know, nothing to suggest the counter trend was getting stronger. We have a cloud crossover signal. Then we get that little bit of a retest. This number 1 actually printed on a weaker pullback. So there's the number 1. Then we get a little bit of a stronger pullback into the hard edge. There's the number 3 now. So compare that with this mess up here. This is suggesting, yeah, okay, we got a little bit of a trend going on here. We're getting a hard edge bounce. No number 2 in the mix here to kind of mess things up. And we did get a little bit of follow through. So some of these things, Thomas, you're going to learn by doing. The nice thing about trading is that you can trade in hindsight for free. And here's a great little exercise to do. You just grab your chart at the bottom and you pull it back and you just stop at random. You should go into your indicators when you do this little game. Go to your tool, your Raptor, and pull down to the very bottom and turn your arrows off for a moment. Go here to do not plot, because you're going to see your arrows are printing here in the right margin, and you don't want those influencing you when you look at the signals and you try to determine, okay, would I take this trade? How would I set it up? Okay, well, I would take it like that. I'd probably risk it down here, and then just play with it. Just go bar by bar and say, okay, what would I do? What would I do on this bar? Well, okay, would I roll my stops? And just do a little what if scenario. Okay, I would have got stopped out. What if I had left my stop down here? Okay, I still would have been stopped out. So it was a good idea to roll my stop. Why did that signal fail? Why did that number 3 signal not have any follow through? Oh, look, it's only like 30 seconds into the session. Maybe I should avoid the first few minutes of the trading day. And that's how you're going to learn, is you just roll through the charts, observe your signals, pretend you're trading, see how the trade works out, and if you made a bad decision, try to figure out why. And having said, if you made a bad decision, remember there is such a thing as a good loss. I know it doesn't seem to make sense, but let's say you took this number 3 signal, you covered the trade down here, the market comes down, comes back up, you roll your stops to here, the market comes down, stops you out here. If you had not rolled your stop, you would have been stopped out here. This is a good loss. You did everything correctly. Yes, looks like you lost about $200 on the trade, but it was just one of those things. You did everything you could. The market just did not cooperate at that particular moment. Yeah, Christian says we now have a number 4 signal in the NASDAQ, a failed number 2 and a successful number 3. Technically, the number 4 signal is what I refer to as a double pullback. It was a little bit too difficult to program, but it looks like this. Here's actually one that's practically textbook. It also is a continuation signal. The market moves into the cloud, comes out, produces a signal. Moves into the cloud, again, comes out, produces a signal. That is your double pullback signal. That's what we loosely refer to as the number 4 signal. It's like the sellers will allow the buyers to move against them twice, and then they say, okay, no more. And then they move the market back in the original trend. And vice versa. All right, class, what are we getting here? What does this look like to you? We haven't printed a warning, but we do have a signal here. What is it? Yeah, there you go. You got it. It's a number 2 signal. We've got something resembling a trend. It's not a super strong trend, but still, it's a trend of sorts. Look at where we're bouncing. Look at that, 53.44, right back in this whole mess again. So we've got something resembling a trend, and we have a test, a retest of the low, and now we are trying to head higher. We've actually produced a buy signal. And we have a second push opportunity on this one. Clayton's playing the prediction game. He says it's going to fail. How do you know, Clayton? How do you know it's going to fail? And I'm not saying that to, make fun of you. I never make fun of anybody. Believe me, the market is a great humbler. But the point is, nobody knows where the market. Oop, got to get my mouse out of the way here. Nobody knows where the market's going to go next. So that's why if you have a signal, You need to consider the signal. Is it a signal that I want to try? And now, admittedly, I may have gone in a little heavy here. I do have two contracts. It is a counter trend signal. I usually just do singles in a counter trend situation. Alright, so here we are now. We're back into the hard edge. Now this is usually our target on a number 2 signal, which is why when the band gets really extended, we'll tend to get a better follow through on a number 2. However, sometimes when it prints near the band, it will actually, well, it will almost always overshoot the band when it prints near the band. So that's what I'm looking for here. Hopefully a little bit of a move to the upside. Now that we're back here around 53.50, maybe we'll get up here to 53.60. Wouldn't that be nice? You know what, Christian? There's a lot to be said here. Christian says, yesterday I noticed that my wife was a better trader with the Raptor. Maybe women do not interpret too much into the charts and the signals. That is true. That is true. Generally speaking, and I'm surprised there aren't more women traders. I don't know. Maybe it's because us guys, we got the left brain, right brain thing going on. But that's true. There's a lot of truth to that. I've known some very good women traders. And like I said, I'm surprised that there aren't more women in the trading world because a lot of them are very good at it. So there you go, ladies. Give yourselves a pat on the back. All right, come on. Get above that 50. If we can stay above the hard edge here. So right now the hard edge printing just shy of 53.40. If we can get on the other side of that, I think we could do okay. Yes, Clayton says, Eric, wouldn't you rather try to scalp 2.5 points rather than try to run it out on a counter trend? Yes. Yes, definitely, Clayton. It's just the way I have my default set up here. Typically, like I said, I wouldn't be looking to trade two contracts. I would just take the single. And I'm usually a big proponent of all in, all out type trades. 53.40 is really causing us a little bit of hassle here. Again, the bar we're at, look at how neutral. This is very much a decision bar. We got lots going on here. Maybe we just got to give it a little bit of a push. Come on, let's get going. Come on, get up there. If they don't smarten up soon, I'm going to do something with my stops. But, oh, there we go. We might catch a break here. Yeah, we have to have some fun with this, Clayton. Come on, get up there. There we go. 53.75. Let's see 54. Come on. I feel like I'm at a horse race. There we go. 54. Let's go. So you can see this bar, the width of it. We had a lot of trading go through this bar right here. 7,200 contracts traded. Clayton's at the horse race too. Come on, number 2! All right, well, they're really starting to drag their heels again, so let's see. Maybe we will get a little bit more aggressive with our stops, throw them up there. If I can get one more bar in my favor, I'm definitely going to take the trade to break even. In fact, I can roll my auto break even down here. Yes, Tom, you read that correct. So Tom says, is it correct that when prices reach the break even, in currently 53.55, that the stop will be moved to, it won't be moved to 53.55, it will be moved here to 53.52, which is my entry. Plus 1 tick, because I have it set at plus 1 tick. So hopefully we'll get another tick out of this and we'll see the stops automatically roll up to my entry plus 1 tick. Come on, NASDAQ, we're trying to make a point here. And then Tom asks, followed by, okay, so you see the stops now automatically roll to 53.52 quarter. I still have a profit order in play for 1 contract, 1 out of my 2 contracts at 53.57. Although I do agree with Clayton that it would be prudent to just go all in, all out at that point. That being the high of the day so far. Yeah, like Clayton says, the auto break even saved them on the last trade. It's a nice feature. I'm of the opinion if the market gets 3/4 of the way to your profit objective, that's probably as good a time as any to go to break even. I've known other traders to be more aggressive. I've known other traders to be less aggressive. I've known traders who actually put their break-even trigger on the other side of their profit objective. But my own personal opinion is that if you get, 75, 80% of the way to your profit target and then the trade fails on you, well, you might as well take the break-even stop out. Now, that has cost me sometimes. It has stopped me out of a market prematurely. But generally speaking, it's helped me more than it's hurt me. Oh, come on. Are you really going to hang there at 53.57? One tick shy of our first profit target? See, I should have taken it right on the hash mark. It's my late entry that's going to hurt me now. Clayton says, take the profit. That's always an option too, folks. Don't forget, you do have a close button here, and currently, yeah, that's nothing to walk away from. See, it was my delayed entry. I was a few ticks late on my entry, and now that's going to leave me hanging. The market price hitting the primary support line right on the number, 53, 56, 75. Right on the bean. Darn it. All right, we'll squeeze the trade here. Come on, get up there. If we get the other side of 53, 57, we know there was some active selling here. Their stop loss orders, which are buy orders, are going to be right nearby. We may see a little burst here if we can get above 53, 57. There we are, 56 half, 56 quarter, 56. You're going the wrong way. 55 three quarters, 55 half. Get up there, come on. Usually the market isn't that precise. Usually, if I enter a couple of ticks late, it's not a deal breaker, but they're really giving me heat on this trade. Buyers better show up in a hurry here. Yes, definitely. Clayton says, when this trade is done, can you show me how to one-click enter the market with stops and profit automatically on the chart? Well, you won't be able to do the profit target. But if your stops are enabled, you will automatically have a stop in play, which is the more important of the two. Your profit target, you're going to have to right-click and select a profit objective. The Trailblazer is the tool that does that, but the Trailblazer does not have the risk component built in. Oh my gosh, don't you dare. All right, they dared. All right, let me just make a couple notes here. All right. So Clayton's asking, how can I make sure I have a profit target and a stop loss in play if I hit my buy or sell button? So that's actually what you're going to do, Clayton. That's your one-click, get me into this trade now scenario. So what you need to have is you need to make sure your stops are enabled and make sure the stop strategy is displaying where you want it to display. So in this case, if I wanted to sell, obviously that's, well, you're still going to get an auto stop. By this I mean, okay, the parabolics are against us, but if I hit the sell button, it will default to this quantity down here. Well, actually, why did, oh, sorry, my mistake. If your tick targets are enabled, you will get a profit target. What the heck? Hold on, that's not right. Why did I get 3 contracts there? That's not correct. Don't tell me I broke it. All right. Okay, so it's on risk percent mode. No, Clayton, it doesn't automatically revert to manual. No, it will, the buy and sell buttons will default to whatever this quantity is down here. So I want to make sure I have a stop enabled. Yeah, that's not right. I'm not supposed to be short 3 contracts. All right, let's see what it does if I go to manual mode. Yeah, okay, that's correct. I don't know why it printed 3 contracts before. That's very odd. Okay, so what it will do then is it will automatically give you a stop. Now you'll notice that my stop strategy is actually down here. Trade Manager knows that your stops are on the wrong side of the trade. So it will give you a default stop. Now, you'll go into your strategies window for your trade manager. You'll need to turn your trade manager off down here in order to make these changes, but I'm just going to show you where to find it. You're going to go here to the top and invalid trail stop, item 4B. Yours probably says 10. 10, I find 10 ticks is a little bit tight, so I've dialed mine up to 30 ticks. And what that does is it gives me a chance to do something with my stop. My stop's a little bit further away. I can adjust it. But it's not so tight that the market's going to bring me in and stop me out right away. But yeah, that's unusual. That in risk mode, it gave me those kinds of results. I'm going to have to tell the guys about it so that they can look into fixing that. But it looks like if you go to manual mode, it will correctly default to this quantity here. And it will default to your stops, your preset targets. So they fixed that. Oh, sure. Now they're going to go up to 53, 57. Stinkers. So we're getting a little bit of a premature number 1 signal here. The cloud's not crossing yet, but we have that market pressing the other side of the trading band. Oh, you scoundrels. So, you know, here's an instance. Had I let the break even take my trade, I would have got tagged at break even. As it is, I managed a $60 profit. But had I been a little more conservative with my stop still, I would have realized that target and a little bit more. So it's always a balancing act. There's no right answer. The only right answer is the one that is correct for you. Like I say, it's your money. Okay, we had a first micro macro cross print about the same time as our Raptor signal. First micro macro cross, perhaps a little bit easier to manage. We also got a trend change signal just printing here on the Falcon that I could have got on board. And it does look like the buyers are pressing, probably get us back up to that 53.60 area, which we are actually pretty close to right now, aren't we? Clayton says, is this going to be a retest for a failure? This current move, in the big picture, yes, maybe. I think what I would be looking for, though, is more this type of thing. And that's going to be our number one signal. This might, though, we are retesting these highs. So expect the sellers to show up sometime soon. Oh yeah, you're right. Russell says the gap is almost filled. That's right. We had that tiny little opening gap, about a 10-point gap. And we are up there, aren't we? We're just about completed that gap. And there they go. So all the way back here now to the median line. Very strong this morning. Yeah, now they're getting some traction. Look at them go. Okay, so now that the market is obviously bullish, what do you think traders are thinking? They're thinking, well, we missed that move. Where else can we get in? So somewhere through here, we are retesting very close to yesterday's highs, certainly to the overnight high. Somewhere through here, the market is going to get knocked down. The sellers are going to try to push the market lower. Buyers, however, are going to be buying for any reason. There's going to be some traders that are going to throw fib levels on here and they'll buy at fib levels. Other traders will just outright buy any bar that closes lower. They'll be looking for any excuse to buy into this market because it seems like it's a very strong uptrend. Now, through this whole process, the market may chop around a little bit first. So you should not expect the market to make another really strong rally without, perhaps spending a little bit of time going sideways, making a couple bars higher, making a couple bars lower. They're really going to dice it up here, really make it difficult to interpret what prices are going to do next. They're going to chop all over the place. But if you're able to buy in a little bit lower, say on the number one signal, say number one signal prints right about there somewhere, you're going to have a little bit of extra staying power. But I think it's fairly obvious right now that the market is bullish. That's a huge recovery this morning here on the NASDAQ. Tom ask a question here? All right. Sorry, Tom. I didn't mean to confuse you. Tom's asking about the Trailblazer. Tom asks, the Trailblazer description and video is confusing to me as I don't have enough experience with the NinjaTrader. How does it differ from the Trade Manager, and which is better? Well, first let me tell you why the Trailblazer was developed. The Trailblazer was developed because some of the DTS owners and Raptor owners were trading markets that were moving very quickly. So rather than take the time to set your profit or set your entry, set your stop loss, and now have to go hit the submit button, which would be 3 clicks, 4 clicks if you had to choose a profit target, entry, stop loss, profit target, and then submit. What would happen is, for them, the market would do one of these things. It would take off for a couple of bars, and then they'd be left out of the trade, and of course the market would go out on without them, and they'd be quite upset. So they said to Adam, Adam, can you give me a system where it's a one-click entry system, where I just hit the button once and I'm in the trade? Adam said, okay, let me see what I can do. And that's when the Trailblazer was born. So the Trailblazer which I'm not even sure is available anymore, but oh, there we go. There's the Trailblazer. It defaults to these values up here. So what you do is you preset how many contracts you're going to trade. You preset your profit objective. So in this case, I've only got one contract with 10 ticks. I could set another contract, and let's say I wanted 30 ticks on that one. I can still have my stop strategies, but now I'm just hitting the buy and sell market buttons. And if I hit buy market, I have 2 contracts, because that's what I have. 1 contract, 2 contracts. One contract has a 10-tick target, the other contract has a 30-tick target. Okay, so those are set up the way they are. If I enable a stop strategy, I'll automatically have my stop in play as well. All right, so that's the Trailblazer. The disadvantage to the Trailblazer is that you have no control over your risk. You need to have a reasonably good idea of how many contracts you are able to afford in each trade. Okay, so you can't obviously, if I did the Trailblazer like this, I've got almost $900 in play down here. And even for my contract size, or my account size, $900 would be too much at risk. So you have to have a reasonably good idea of what your average risk exposure would be when you're using a tool like the Trailblazer. We'll close this out. The Trade Manager now. is the one that we are more used to. It has the risk component built in. We still have the buy and sell market buttons. We still have the stop strategies. But it's this risk component I think is invaluable. Knowing that when you set up a trade, if the trade goes poorly, okay, I've lost $240, but I haven't lost more than I can afford. I just think that's so important. Wow, they're on a tear. We might not get a second chance to get in here today. We may have to wait till tomorrow. Well, looks like the seller's trying to show up again. You see this bar has a little bit of a tail to it, so we know there was some selling going on there. This bar now coming back with some additional selling. We're just shy of our secondary resistance line here of 53.75. And maybe we'll see the buyers, or pardon me, the sellers now try to take their market back. And there's going to be some profit taking here as well. And if not here, soon. It seems when you're in doubt with the stock market, buy. The stock market just crazy strong. I'm not the only one waiting for a little bit of a correction here, but don't get too excited. Every time you think the stock market is going to correct, boom, up she goes. So this is now going to be a very exaggerated number one signal. And when the band starts to get this wide, you should be thinking a number two signal as well. That perhaps the market is overbought, and we may see a reversal. But you can see how powerful a number two signal is when the conditions are right. This was practically a textbook retest, a failure, pardon me, a failure, and then just a tremendous rally. My only error was that I was a little bit too quick with my stops, which if you've spent any time in the trading room with me at all, you'd know is a problem I have. I get a little too anxious with my stop. Clayton says, me too. I must have picked that up from you. Yeah, it's it's a bad habit. Good. Christian says, in Trade Manager, and this is a modification that they've made, by the way, which is probably why the Trailblazer is not being promoted any longer. But Christian says in Trade Manager, it does work as a one-click tool. You set your quantity, and you hit your buy and sell market buttons, and you will get your profit target based on your presets, and you will get your stop loss so long as you have a stop enabled. So good to know. Thanks, Christian, for confirming that. I don't know. We could see a retrace here to the hard edge even. That would bring us back in that 5360 neighborhood. The problem with this trade now, if we produce a number one signal, is the stops have got to be very, very deep. So it looks like the seller's holding the market 53.75-ish. Well, Clayton, you have a good eye here. Clayton says, is the Falcon producing a scalp signal? Not so much a scalp signal, because this is the swing trader. We would look for a little bit more follow through on the signal. It is producing a double dot signal. However, the double dot signal is a counter trend signal for the Falcon. And as such, I usually have to be able to tie it in with something in the recent history of the chart. So right now, there's nothing. Oh, I suppose this high is close enough. If you wanted to try a counter trend signal, see, usually what I do with the double dot is, I don't do that many double dot trades unless the conditions are just right, but ideally what you want to see is, let's say we had this peak right here, and then the market made a big reversal down. So you could say, oh, look, it wasn't that long ago that the market topped out here, and look at the nice move it made lower. Let's see if it does that again. Once more, because it's a totally counter-trend signal, you're going to go in light. You're maybe going to take a single, maybe you're going to dial back your risk amount. But we only have the warning dots at the moment. There's the signal itself. And so what you would do is you would set it up. Well, no, sorry, I don't want to do that. I don't want to go in for a double. You would set up like this, and again, because it's counter trend, you would be looking totally for a scalp, or pardon me, all in, all out, not a scalp. And I forgot, that wasn't actually there. I just drew that there. Sorry, I almost took a trade I didn't intend on taking. But if the market had peaked right here, that would have made for a better double dot signal, counter trend signal. You need to be careful going counter trend. I'm not suggesting the market isn't going to retrace. I do think that we are due for a retracement. At least a modest one. But you need to be careful when you get stuck on the wrong side of a strong trend. And as I mentioned earlier too, trading isn't so much about chasing every single signal. This is a difficult thing for a lot of people to get over, myself included. Trading is not like working a production line. This is not the more I do, the more I pay, the more I get paid. One of my favorite trading quotes is from Jesse Livermore, and I use it in my nightly update. He said, the money is made in the sitting and the waiting, not in the trading, which is stellar advice, and like most great advice, it's ignored. The money is made in the sitting and the waiting, not in the trading. I don't even want to do this because I'm going to get choked at myself, but let's say I wasn't so quick with my stop. What is this run worth? There, 375 per. So that would have been banked $100 profit through there, another 375. That would have been like a nice little $500 move right there between the two contracts, of which I got 60. Now, okay, $60, better than a kick in the head with a frozen boot, but not quite as nice as a $500 profit, to be sure. So I put a little star in my trading journal that perhaps I was a little quick with my stop. But, you know, it wasn't a losing trade. It wasn't my best effort. Tom, I've got your question there. I'm just going to deal with Christian's question first. Christian says, can the indicator warehouse ultimate RSI help together with the Raptor to filter bad signals? Yes and no. First off, the Raptor and the whole DTS system is a very refined trading system. Strong enough that if you wanted to add other indicators, you could certainly do so. So, for instance, ultimate RSI, there we go. So let's say I wanted to run the ultimate RSI along with my Raptor. There we go. Ultimate RSI at the bottom. And I still have my Raptor. You see I'm still producing signals. The question is, does this help you make a decision? If the answer is yes, then by all means, honestly, by all means, go ahead, use it. If this does not help you make a decision, if this confuses you, get rid of it. Because successful trading is more about being able to make a decision than worrying about the bad signal. You will always have a losing trade so long as you are a trader. Get used to it. If your goal is to eliminate all losing trades, you will spend the rest of your trading career fiddling with new indicators and new trading systems, and you will never make money trading. One of my best trading months ever, I lost on 60% of my trades. I was wrong more than half the time. Your goal should not be to filter out bad signals. And I'm sorry if I sound like I'm talking down to anybody. I'm not. It's an excellent question, and I'm glad Christian asked it. Your goal should be to find a signal that you can make a decision on. Well, let's not even use that one because we know that had a good result. Your goal is to find a signal that you can make a decision on. After that, it's a matter of, can I afford the trade or not? Where am I going to place my stop loss to give this trade the highest probability of success? Well, for me personally, I like the last swing point. I think that's fundamentally a sound place to place your stop. It's a great uncult point. You know, if the market brings me in now and reverses and takes me out up here, well, then I'm obviously on the wrong side of the trading equation. The stop is far enough away that I don't get stopped out prematurely. If I place my stop right here, well, then I already took a hit. And if I know my risk amount is always the same, if it's going to cost me $300 to place my stop up there or $300 to place my stop right here, why would I not leave my stop a little bit further away and skew the probabilities in my favor? When the market starts to go in my direction, well, then now I can manage this trade and I can bring my stops in, and you know, fortunately the market came down, hit my profit objective, everything is good. But even if it hadn't, I still need to have the ability to manage my trade either via my auto break-even trigger, in which case I would have got tagged at break-even. Maybe I'm going to run a tighter profit objective because, hey, the market's been sideways for the last month almost, or certainly the last couple of weeks. Maybe I'm going to adjust my profit targets. The objective is not to be correct 100% of the time. The objective is, yeah, here Tom just makes the comment, I have to start thinking like a trader, and that's absolutely correct. Believe me when I say you are on par with Paul Tudor Jones. You are on par with Ed Sequoia. I won't say Warren Buffett because he's more what they consider an investor rather than a trader. You are on par with every other trader on the planet. I guarantee you nobody knows where the market is going once this signal prints. We speculate. We say, that looks like a number 2 signal. The market might go up from there. Maybe I should buy it. What would that cost me if I was wrong? Can I afford that? Yes? All right. I'll take the trade. And that is everything you need to know about trading. Now, like I said, if RSI helps you make a trading decision, if it confirms to you that, yeah, okay, that's looking like a reasonably strong buy signal, RSI confirms it, Raptor confirms it, I'm going to take that signal. Then you go right ahead, you use RSI. Mike Filigera, who trades the stock market with the DTS system, he likes fast stochastics. He's the only guy I know who trades fast stochastics. Slow stochastics, sure. Fast stochastics, I don't know anybody who trades fast stochastics. But it helps him make a trading decision. He's comfortable looking up and down at the fast stochastics. He says, yeah, okay, the market's oversold. It should go higher. I've got a buy signal. Go ahead. I'm going to buy. But it doesn't cloud his decision making. The last thing you want is to throw so much stuff on your chart that you can no longer make a decision. Because what's going to happen is while you're waiting to make a decision, the market's going to do one of these, and then it's like, oh, crap. I didn't even make $60 on that trade. So yes, it kind of ties in with Tom's question, where Tom says, "I've currently got the Raptor. Would it be worthwhile to pick up the Hawk, the Falcon, and the Eagle?" Again, it's a yes and no. Will it produce more signals? Definitely produce more signals. Are you after producing more signals? No, definitely not. The Raptor, as I mentioned before, is a hybrid. It incorporates the elements of the Hawk, the Falcon, and the Eagle all into one trading platform. The Hawk and the Falcon and the Eagle kind of dissect the market for you so you can see the different things that are going on. I use the analogy all the time of a hybrid car. The Raptor is the Prius. The Hawk is the Corvette. The Eagle is the Ford pickup truck. Does the Prius get you from A to B? Definitely. Does it do it as fast as the Corvette? Definitely not. Can you haul as much stuff in your Prius as you can in a Ford pickup truck? No, you can't. But does that mean you can't take, a bookcase or whatever, throw your ottoman in the back? No, of course not. So it's not about signal generation, and it's a hurdle to get over, folks. You go to any trading forum on the internet, and all they talk about are trading signals. And it's almost like when you look behind the curtain and you see what's really involved in trading, it's like you're smacking your forehead saying, why are all these people talking about trading signals? Sure, a trading signal is important. You have to figure out where it is you're going to get into the market. But honestly, does it make a difference whether I buy this number one signal that's going to print or whether I buy this macro pullback signal? No. You're still going to be in the market. Yeah, okay, you may get a slightly better fill on the number one than on the macro pullback, but so long as it gets you into profit, who cares? Christian says, I like the Raptor picture as my family van car. I come from A to B in security. There you go. I may use that analogy next time. The Raptor is the minivan of trading. But it is, and honestly, folks, I don't want to sound like I'm talking down to anybody. It is a mindset. It is something you have to wrap your head around. We all get excited about the signals. Signals are fun. Signals are sexy. Hey, I'll be the first to admit I love playing with indicators. I love tweaking indicators, back testing them, finding what works, see how many signals I can, filter out poor signals, find good signals. But it's not all about the signal. All right, well, we do have a macro pullback here waiting on the number one on the Raptor. May get a late filter entry here on the Falcon. Well, and yes, Clayton makes the point too. It's about the quality of the signal, isn't it? And yes, it is. And again, that goes back to the whole point about trading quotas. Less is more. Find those good opportunities. Is this a good opportunity that we have here on the Hawk? Yeah. It's a high probability signal. It's a macro pullback. The problem I have with this is we've had all this rally through here. There is a chance the market will pull back, maybe here to 53.60. So where do I place my stop? That's the only problem I have with this trade right now. It's not, should I buy? No, I should definitely buy. Where am I going to place my stop? All right. Trade manager says, go ahead, Eric. You can afford it. Knock yourself out. Now, if I buy in at this level, I have to be prepared to take a fair amount of heat. Maybe I will forego this signal. Maybe I'll say, all right, maybe I'll get a red bar buy signal. Maybe I'll get a hard edge bounce. And there's just going to be times, folks, you're going to miss the move. It happens. Shoot, I miss moves all the time. You're not the only one. But somewhere through here, there will be another opportunity to buy in. The move may not be as pronounced as this move was, but we will still get an opportunity to buy. Tom's asking, what's a red bar buy signal? Red bar buy signal is a signal that is unique to the Hawk scalper. It tends to develop near the end of a trend on a rather deep pullback. Here, I'll show you the inverse of it. This is a green bar sell, which occurs in a downtrend. So, according to the Hawk scalper, everything is red. We are in a downtrend. We get a rather protracted pullback. We produce green bars with a sell signal. That's a green bar sell. Kind of the last ditch effort on the part of the sellers to recover the trend. The red bar buy is the opposite. It occurs during an uptrend. I guess this is one right here. So the market has a little bit of an uptrend. It retreats. It produces a combination. Very often one of the bars will be yellow. Usually it's the second bar, but in this case it's reversed. So we get the warning dot. We get the red bar with the buy signal. So same thing. The last ditch effort on the part of the buyers to recover the trend. That's a red bar buy, and the inverse, the green bar sell. So right now we've got a macro pullback signal, Everything is in sync except the micro line. It has changed color, so that's a buy signal now for the hawk. Don't have the number 1 signal printing there yet. Might be working a late filter entry signal here on the Falcon. The filter is out of sync. We would wait for it to come back into sync and for a buy signal to produce. So right now, the hawk is the only one producing a signal for us. So there's our macro pullback. It would look something like this. We throw the order in, and that's our trade. Now, is this a great looking trade? Well, no, it's not. Why? Well, because look at where my profit target is. It's very close to the highs, isn't it? We already know there's some sensitivity here around the 53, 74, 75 area because the market got knocked down twice. Got knocked down here and got pushed down again there. Does that mean the market can't go up? No, of course not. But would it not be easier, or would it not maybe make a little bit more sense to try to buy down here? You know, if we get a buy signal down here somewhere, prices slip lower, and then we come back and we produce a buy signal right here, would that not make a little bit more sense? I think so, because look, the highs are way up there. Now we have all this room here to realize our profit objective versus trying to realize our profit target up here. Okay? All this room or this room? This room or this room? It just makes it easier, right? So will I get that deep retrace? I don't know yet. I'm still producing warning dots. This is still a macro pullback, but the lower it goes, the easier it will be to buy it. Why? Because look, now it's easier for me to find my profit target before I encounter this area of sensitivity at 53, 74, 75. Tom's asking, why is it red if it's a buy signal? Okay. Here, we'll use the green bar cell, which is the same thing. Or here, I've got a better idea. I'll show you the textbook version. And you can download these at the members area, or you can write me for it and I'll send it to you. Okay, this is a textbook red bar buy. You can see it's been a long time since this happened. This was like 4 years ago. Had a nice little rally, all the signals just producing one right after the other. Now we get a red bar buy signal. It's a red bar, but it's a buy signal. Why is it a red bar? Because the sellers are pressing hard enough that it actually changed the parameters in the programming enough to make the bar bearish. The hawk prints 3 color bars. Green bars when the market conditions are bullish, yellow bars when it is neutral, and then red bars when the market condition gets bearish. So it's a bearish bar, but we produce a buy signal. This is like the last chance for the buyers to recover the trend. It's like somebody just poked them with a stick and said, hey, wake up, the market's falling too deep, the sellers are going to take over. If you guys are going to buy, you better do it now. That's why it tends to develop near the end of a trend. You can see it's kind of the last ditch effort on the part of the buyers. They rallied up a little bit, hit the high probability profit target, and just market fell down. Here is the, oh, see, here we go. We got the red bars. We got a buy signal, but we're producing a red bar. Now, if this slips much lower, it will negate the buying pressure, and the buyers will just go away. In fact, how are we doing here for time? So that started around 7:30. So we've been drifting lower for a better part of a half an hour. That's significant too, in and of itself. That the buyers have been, or pardon me, the sellers have been pressing the market lower for that long. See, so we're drifting now toward the hard edge. Whenever the market encounters the hard edge, we anticipate a reaction. So here we are on the Raptor. Near the hard edge, we may come out with a number 3 signal from here. I'm expecting a retest of the high. I don't think this little itty-bitty retest is all that the sellers, or pardon me, the buyers are going to muster. You just made this monster push higher. The sellers knock you down. Is this really all the buyers can manage? Is that it? Right there? It doesn't seem very likely, does it? So now they're back down to here, and like I said, all through here, buyers are going to be looking for a chance to buy in. They're going to be looking for an opportunity to get long and try to relive this rally here. Now the sellers are thinking, oh, we got the buyers by the tail. We're going to push this market back down to the lows of the day. Maybe. Okay, so we still got red bars with buy signals. There's buy warning dots. We don't have a complete signal just yet. Okay, maybe they're finding their footing now. We're close to this whole 5360 area. They could slip lower. Could get down here to 53.58, maybe even 53.56. But we've seen the market kind of hold its own on the 10s, 50, 60, 40. I like Christian's question here. You guys are full of great questions, by the way. Okay, so we have a completed red bar buy signal now. Christian asks, Eric, do you think that one instrument like the NASDAQ is enough to make profit to live for trading? when I understand it right, the key is the number of contracts, not how many instruments we use. So to concentrate on one instrument first can be a good way to learn to trade to be profitable. I would agree with that. I think you can make a living trading one instrument, whether it's the NASDAQ or the E-mini or gold or crude. Some of the best traders I know only follow 2 or 3 markets. I don't think it's necessary to be scanning a half a dozen markets all the time looking for trade opportunities. Again, that opens you up to the production line mentality, right? I need to find more opportunities. No. What if I have one opportunity here and I take 10 contracts? Let's say I could afford it. Here, we'll just do this for giggles and grins. Okay, so here's an opportunity. I need to adjust this a little bit here. Okay, well, they may not film me before we close the class here, but that's $500. If I do that twice a day, that's $1,000 a day, $20,000 a month, $2 million a year, or pardon me, $200,000 a year. Drop to zero there. That's not a bad way to make a living. On 2 opportunities a day, mind you. But, you know, you have to be in the position that you can afford to trade the 10 contracts, of course. Yeah, Floyd says you need multiple markets because your favorites might be in a chop phase. That's true. But even if they're choppy, you know, they're not usually choppy for too long. You may take a few days out of the year without too much activity, but again, you know, trading a very personal business. I can give you what I think is right, but at the end of the day, if you're more comfortable following 5 or 6 markets, then by all means, follow 5 or 6 markets. My personal preference is to follow 1 or 2 or 3. You see how often I pull over a gold or a crude oil chart? Not that often. I usually just concentrate on what's going on here in the NQ. But I think to start, you know, the whole training wheels mentality, get used to trading one market and then maybe branch out to another. All right, they're not going to go. I was going to make a point here, but they're not going to. Well, not as profitable a day as I would have hoped. It would have been nice to capture that move going higher, but we are going to see, oh, wait a minute, they're ticking up again. Let's give it a go. No, they're just hanging there. All right, well, look for a little bit of an uptick here, folks. We'll leave it at that, and I will see you in the trading room again tomorrow morning. All right, we'll talk to you then. Bye for now.